Hello guys, welcome to the Train Parrot. In this video, I'm gonna look at the price action, price close on Friday, CME gaps, liquidation pools, possibility of defending $80,000. But you have to give me the pleasure of talking at the end of the video about general markets. Because what you're seeing in the screen at the moment, this move of the VIX to the top of the channel on the RSI, getting to levels closer to 80, is something that I've been preaching pretty much at least once a week for the past 6 months, if not longer than that. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell to get notified every time I put out one of these videos. Can we get to 1,000 likes after having forecast VIX hitting almost 80, Nasdaq producing a deeper correction, Nvidia going in the way to the target of the full correction? Now let's see what Bitcoin is going to do. Guys, I have incredible news for you guys. If you still haven't joined my Telegram community, which the link is in the description, please do not Google Trading Parrot Telegram group, because you're gonna 99% chances land in a scammer group. You have to use the link in the description to get the official one. We just launched a new bot. This bot allows you to see my charts pretty much in real time. You can see the 4-hour chart with all the drawings I'm doing anytime that you want. We are still refining some details. For example, it's being extremely disruptive to the conversation, so we need to figure what to do with that. If we're gonna have a separate group for the charts or a separate topic, we'll figure something. We are introducing charts for Bitcoin, for altcoins, and for general markets. So if you are on the move and you're carrying your phone with Telegram, you just tap one button and you get the charts with all the lines that I'm doing in this channel. And yes, to be fully honest, eventually we're gonna monetize it because we need to fund it, right? Running these sort of things and developing these things, it's a lot of work. So stay tuned for that. Come and join the Telegram channel. Give us your feedback, your ideas. We are all ears. And yes, the news of the day is Bitcoin bulls defending 80K support as World War III of trade wars crushes the US stocks. Bitcoin bulls aim to hold the 80K to prevent BTC from following the record-breaking losses seen across the US equities markets. And I said, I'm very happily surprised because I thought that the move this morning to 84K was just because we have the max pain on some options expiring. I think it was 1.6 billion, and that max pain was at 84. And after I published my video, as soon as the options expired, we have a correction back into 82. So the perception of the video was that it was a good call. But as soon as we went back down, I publish on my Telegram, Twitter, and Instagram once again. What the hell is going on? Why are we having such an extreme amount of longs defending the 80K, regardless, despite of the bearish shape of this pattern, which is a head and shoulders? And right there at the neck, I am seeing extreme amounts of bidding liquidity. We got the signal in here that was spiking like crazy right there. At 82, bulls were defending that level, and no one is going to convince me that that sort of passion from the longs is just because there is a $300 CME gap located at 85K. There is something going on. Something is cooking, because in a normal circumstance, 99% of the time, in this scenario, guys, I guarantee you, general markets having a massive, large correction, a deeper one that calls for recession, and Bitcoin should be by now somewhere below even 70K. So that's the effect of having me scratching my head and thinking, where is the catch here, really? And this morning I called sarcastically BTC safe haven and the catch, because that is precisely what I'm trying to figure today. And I guess many of you, mostly the ones that are good traders, are also thinking, what's going on in here? So let's look at the rest of the charts and let's see what we find, right? We have the liquidity going up, but we also see that not much of that liquidity is entering crypto. So yes, liquidity is increasing, but not going into crypto. So I wonder if this liquidity is specifically to the blockchain, and maybe some liquidity somehow is managing to sideline this indicator by entering the institutional way, maybe into the spot ETFs. I guess that needs to be counted on this indicator as well. Let's have a look at the CME gap that we produced on Wednesday. This is the second time that we are right underneath that, and we don't take it. 85k priced in Binance, that is 84,870, and it ends roughly, this is an estimation, at 85,275, and we are right underneath. So in theory, we should be closing it very soon. Now, apparently the market is still open, but it should be closing maybe in half an hour or so. And the good news is that if we manage to close at this price, which is relatively high against the 81 that is our current support, then kind of we get the insurance effect, right? If price goes lower and takes that liquidity that we have right here at around 81k over the weekend, and let's say we carry on maybe even into 78, 76, then we produce a massive CME gap that together with the one at 85 could be a stronger insurance to go back above water level, so we can go back to breathing, right? And exit from our long if we want to or need to. Another consideration for the weekend, very important, if we close at this price without closing this gap, and over the weekend we pump, let's say we pump into 90k, let's be extreme, and we take the liquidity at the top end of the past 2 weeks, that is from 88,500 into 90,500, I will say, then of course we will be producing a larger gap. And we cannot say that we took this one, because over the weekend from the closing price of CME, as soon as it goes offline, any move up starts counting as the beginning of the gap. And let's say then we pump into 90, that produces a huge gap, in this case below the price, calling for the price to come back into 84. So for now, we are open to see where is CME gonna close, what's the daily close as well. Tomorrow morning, we'll have that data and we can do an assessment of how to treat the weekend price action. Something that we haven't looked in a while is the aggregated open interest. And tonight, I wanna make an emphasis on something that, again, has me a little bit puzzled tonight, which is the double bottom that we had in September 2024. At that point, we were already convinced that we were gonna break out from the top of the megaphone pattern. It was really exciting times. And you can see in here that the open interest did a pinch of the support with a higher low, okay? The price action, the closes were an equal low. And in my opinion, that produced a bullish divergence. The way I interpret that is pricing here went to 54, but the positions open remained open in there. The longs remain open, and potentially even new shorts enter and new longs enter. And the combination of both created an environment that calls for continuation. There is interest, strong interest to trade, whether it is to be the winner that goes in the breakout, but also those losers are part of the petrol that is mandatory to produce an impulsive move like of these proportions, right? You need a short squeeze, and there you go. That's your short squeeze. And the open interest was announcing that. In this case in here, I am not gonna say that this opposite divergence versus 2024 is sufficient to spoil the party and not have a breakout to the upside. But at the very least, I'm gonna say that we are seeing the opposite situation than in 2024, which should be used as, okay, it's not the same situation. We don't have the same setup. Can this new setup still break out? Sure, but not thanks to being the same setup. Can you live with that? Well, in my case, It is a bit disappointing not to see the same setup, so we cannot really hold on to that and say, well, we have something from the point of view of aggregated interest, but neither I can immediately discard it. This is telling me price is moving up, but open interest is reducing here. So less people are interested to trade, and that counts both for longs and shorts. And today I've been looking at the 4-hour time frame, and it's really difficult to find any pattern in here that we can say, well, we have something really strong. We lost the support, we re-enter, we got rejected, and we kind of have still this move up in here that we are currently defending. But to be honest, I really don't like the messiness of the pattern with this initial pump to the top of the range and then kind of having this move with a lower high. So far, what I see in here is that there is extreme ambiguity. In one side, this can still do something like that, and you can argue, oh, we are in a channel to the upside. But at the same time, so far, having this lower high and having been at the top of the range is a great argument to say, we are in a channel to the downside and we are about to lose support. So 4-hour, I'm sorry, my friend, you are drunk, go home, take some sleep, and we'll talk about it tomorrow. The daily though, it's still somehow in a cleaner state, right? We have this resistance that did a fake out in here, we have moved it, and so far is respecting the resistance. This time is at an RSI of 49 for a breakout on the daily. The ambiguity that there is in here is the ambiguity of, is this channel really like I'm showing it, or is it like this? Because if I put it like this, we are now defending this new level of support and we are about to test the daily to see if we can break out. If I leave it like that, we are on a second retest after having lost support and potentially threatening to finally get that lower low on the daily that we still don't get. On the falling wedge, we are right there at the resistance to see if we can exit from there. The level of 84, that support and resistance has been since end of February been the level that we talk about the most. And I'm pretty sure that if I place here just a volume range, yes, the point of control is definitely 84. I can see it before putting the tool because we continue to go above, below, above, below. We are just ranging around that 84. So in all this range before, the point of control was 97 and it remains 97 regardless of the move down. But if we just put the volume profile in this internal shorter term price action, 84 is the current point of control. So definitely crossing 84 can be seen as going into the bullish extreme of the range. And a rejection from 84 calls for more downside. Next Sunday we are closing the week, and for 3 times in a row we are struggling to get above the bull market support band. I'm really surprised, and I'm gonna say this as many times as needed during this video. Really surprised that Bitcoin is still holding this 84, and I'm really crossing my fingers that all this bidding that we saw earlier during the day is not just some shady exchanges trying to manipulate the perception of Bitcoin to make it look like the new safe haven, the new gold, just so they trap enough longs into that narrative right before letting it fall. I'm just crossing my fingers that that is not a manipulative move, because that will be really bad. Because I know many people subscribe to this, that's not just being a maxi about Bitcoin. Some people will go to sleep and put candles to Bitcoin. They feel like Bitcoin is their new religion or something. To me, this is trading. Let's just clarify. Some people ask me in the questions, Do you believe in investing in crypto? Do you believe in certain projects and fundamentals and things? I have said so many times, I'm here for trading. I can't give a crap of any crypto project. In the bear market, you will get over all that hype. I guarantee you that. There's no single project in crypto that in the bear market you will come back to me and say, I still love it. I love holding that coin. Yeah, sure. I want to hear you saying that in 2026, 2027. All right, let's look at the big boys, long-term holders. What are they doing in here? And let's just zoom in this area to see what has been happening in the beginning of April. And we are just seeing some selling in there, but I wouldn't say that there is panic at the moment, which is what surprises me. You just have to look at how were they doing during the COVID crash, for example. And I'm not saying that today we have a COVID-like crash, but as soon as we were expecting that this was going to happen, there was a big depression in there. They dropped quite a big chunk of Bitcoin during those days. Prior to that, during that, and they started reaccumulating on the way up. So they did have an episode of panic during that period still, even being the long-term holders, which usually are cold-minded relative to the short-term holders. And let's have a look at the Big Well Explorer to see if the distribution, the deposits versus the withdrawals somehow are balancing out after a couple of days of seeing a decent distribution of over 20,000 Bitcoin. And we can see that this morning we were at around 120, if I remember right, and this is cooling down to 0.98. Let's look at the inflows from into the block, and you can see that on Wednesday there was around 21,000 distribution, and on Thursday the reading is around 9K. So that makes all this area quite distributive in terms of large holders. So this specifically filtering out those size of wallets, whereas in terms of outflows, we have outflows for 70, for 1,000, and then for 900. So this literally did nothing to reduce that delta, and that's why the stochastic view of Big Well Explorer is showing it as a very big spike into the ratio of 1. Getting into a ratio of 1 means that overall during those days, withdrawals versus deposits are kind of balancing out. Remember, stochastic uses a length back in time, a look back period, and that's how it's calculating that we are kind of even. But all this period in here has been of accumulation, and I really didn't like to get as high as this because that was enough distribution to create this flat area around the 110 that looked like a distribution. It was a double top, definitely, and it ended up playing out like a double top. So I don't like seeing that there, even if I'm seeing the long-term holders kind of behaving and controlling their panic. And short-term holders at the moment, they are underwater. Their realized price is at the moment at almost 93K. So they are around 10K down in average. And so far, I'm seeing an SOPR that is kind of in the middle. So we have a balance of people selling at a loss and people selling in profits within this range of these past few days. If we had mostly selling at a loss, I will share that as an alpha that we are bullish to go up. But since we are in the middle, there is no alpha at the moment from that end. We exit extreme fear and now we are just in fear. And I cannot believe, and I'm going to say it again, how can we be now in fear if today we are seeing general markets like this? Let's look at the liquidity. And some things haven't changed. We still have the liquidity at around 81K. But you can tell if I magnify this area that at around 3 p.m. UK time, when the price started moving up in here, there's been all these additional longs entering, placing their risk right here. And I think that over the weekend, we might go there and pay them a visit. The thing that now is a little bit of a puzzle is we have the CME gap at the top. The market is about to close and it doesn't really count to go there to close the CME gap. That liquidity doesn't go back into a balance if we visit that over the weekend. Instead of that, we create a new CME gap, potentially overlapping with the one from Wednesday. So I think it's very likely that over the weekend we could visit this area in here. It's just becoming too heavy to ignore it. Even if we look at the 89, which is heavy, and sure, we can go there, but closing the general markets like that, being so damn close to 81 and not taking it, it seems ridiculous to me. Of course, nothing is guaranteed in trading, and the fact that we've been so close so many times and we don't take it shows very clearly that point. So the only reason I see why we don't take it yet is because we are still trapping more longs to taking them later. Let's look at the past 30 days. This is how it looked this morning. Let's refresh, and it looks pretty much the same. We have the 81, we have the 88, and we have the 89 that is still untouched. And let's look at the order book at the moment. Of course, we're going to enter the weekend. Things are going to be a lot quieter, less volume traded. And we exit the extreme fear. Longs are at 54, say they have pulled back quite a lot, not as much as when we went to 46. That was the peak at 89. But as we approach the weekend, many longs are just closing their longs and calling it for the week, not interested in trading over the weekend. And I don't blame them. And you can see that is at 54. And as a result, price is kind of, rolling over a little bit in here. We can also see that all this bidding liquidity, limit orders below the price suddenly shift into red. Price moved a little bit higher, but now is at 83,800. The delta has also become a lot flatter. Now it's just 80k, putting the shorts at higher risk, but just by a small fraction. I will say not an alpha. The order book looks like this at the moment. There is a resistance at 88 with 34 million, and we have 50 million at 95. Below the price, thicker levels are seen at 75 and 74. Let's look at trading light, and you can see that they are just starting to place resistance from 86 to 87 in this area in case price makes a sharp move up to short that with 500, 500, 400, 400, 500, 400. It's a lot of liquidity spread out as a selling wall that starts literally at 5 p.m. in that 4-hour candle. Notice that right before that, the liquidity was below at 78, and it shifted from here to the top as a suppression level now. And below the price, we have the 72.5 that we spot yesterday, I think, and it's still there. The 66 is gone if you missed my video yesterday. And one thing I don't like for taking longs in here, I'm gonna be very honest, it is this. Let's look at the longs shorts delta on trading light, and I like these bubbles in red at the bottom, which are areas of value. Here's where I took my last long. You know about that went public. Stop moaning that I give my calls to Patreons, because I always give them in the videos. If you miss the call, it's because you didn't watch the video. If you pay $10 a month, that goes into your email at the best timing. Then 1 hour after, you can watch the video. As soon as the video is finished editing, it goes out for free. So no moaning in here about the Patreon and the patrons are to spoil. Yes, they are supporting the channel. What do you want? They're paying the salary of the people working for me. So somehow, people need to eat. And yes, the net longs is getting to the top of the range. So you might think, okay, so when we get to the top of the range, shouldn't we be shorting from right here at 15,000 delta longs versus shorts? So these areas at the top of the range were great areas to short. Here is one of them. Here is another one of them. And we have to understand something that is very important. Every area, every period that we are trading in here has a different range, and you have to kind of identify that range. But at some point, that range gets broken and we move on to a new way. right? So in here is a descending range and ascending range. The sooner you spot the pattern, the better you trade that range using this particular alpha. In this case, from around early February, we started spotting that we were moving in a range that was quite constrained and at the low end of the values. And that is because the price action from there and on was bearish, right? So bulls were pulling out way before than around here. In this area of the breakout, bulls were pulling out at 30,000 in the ratio. In this area in here, they're pulling out pretty much at a zero line, which is very low. And that is because things were very bearish. If we get to the top of this range at 15,000, that is very high relative to the areas where we are usually pulling out on the longs. But if we enter an area very bullish, we could go all the way to 30,000. So I don't think we are ready to enter an extremely bullish area. But of course, we are right there in the daily in a bullish pattern descending. So if you think that we are ready to break out from here, then we can go beyond 15,000 in the net longs shorts, break out and define a new wider range. But if we see a rejection in here at the top of the falling wedge, then we are right there at that resistance in the area of value for looking for a short. Maybe a few moves up and that's it. All right, let's look at the fair value gaps and then let's go with the general markets. So we still have the fair value gap of 84,600 to 86,200. We have the two vacuums. Everything looks just the same as before. If we take this fair value gap in here, we are going to form a double bottom formation. Let me draw it so you can see it. There is this big leg and then there is this potential big leg, assuming that we get to the neckline of 87. So if we go for that liquidity of 89, which is around here, we are breaking out from a double bottom formation that has a height this big that can get us into 95k. And here I'm just doing a very early speculative kind of pattern projection into the future. Things can play out very differently, but in my opinion, I love doing these speculative patterns, have them in my brain, and if they don't play out, I don't care. If they do play out, it really helps me to be ready for that scenario and start smelling it earlier before other people do, to position myself to get the best advantage, of course. Let's go into the general markets and allow me on this Friday night that I'm recording a video for you guys to brag a little bit about this huge green candle in here. I've been talking about this for months. I mean, someone should invite me from a channel that they do serious TA somewhere. I don't know how many influencers, but I've been talking about this expansion like a retarded, literally. I felt like crazy. No, we're going to get an expansion on the VIX. We're going to get an expansion on the VIX. We're going to go to the top of the channel of the RSI. And in the meantime, I have to be reading all the people saying, hey, you're crazy for looking at RSI, for doing these things. Things are a lot more complicated than an RSI. But here we are. At an RSI of 76, and I'm calling for 82, that's the point of contact, the impact level. And for months, I'm looking for this expansion, which is a channel up, expanding like a megaphone that eventually meets with that level. And at that point is COVID levels. I called for this one as well into 65 when we broke out from this line and when we broke out from the RSI going upwards in here. And that gave me the whole bias and how to interpret the rest of the patterns on the Nasdaq and S&P. On the Nasdaq, we had the breakdown, and I was already thinking that VIX says we are going a little bit more than the typical correction. We saw the first correction into 19, and I say, but things are looking like the correction is going to be a bit deeper. We can go to 21 weeklies to say kiss goodbye. We didn't. That it was an option, but we went straight for the deeper correction. And if you look at my indicator here, the statistics say 30.75. That is the lowest percentile, beautifully calculated in my RSI VIP. You can see the number is 30.75, the RSI, and the PR low is 30.81. So we have a few cents, stupid cents, for the target met right there. Isn't it crazy? I wish I could see at what date I drew this thing in here. S&P, again, pinching the statistic and going slightly beyond it. After seeing the resistance in here, deeper correction. Was I perfectly right? No, I'm never absolutely perfect. For example, I never went to the 21 weekly. I never touched the median for a rejection and then dumping down. We just went straight for the final target. And one thing I have to say, we met that target. I don't know where this is gonna stop, really, because I have to show you Nvidia and other large cap stocks. You can see Russell target met. We went into the lower percentile as well. Nikkei has broken down from the double top in here. So this is not an index from US. This is Japan 225. So this is more than just US stocks in travel, right? So at the same time, Nikkei is reacting like this. So I suspect, maybe I'm wrong, I'm not an expert in Japanese economy, but maybe this is also a reaction from the tariffs. Please write down in the comments, correct me. I'm happy to be corrected. The only way I learn, the only way I put new things in my brain is when people teach me new things, and I love learning new things. I'm addicted to that indeed. Breaking down from the conservative neckline, from the aggressive, and now on our way to 27. So write it down, come back later. Google is breaking the neckline, is testing the bottom end of the percentile. Apple, look at Apple. That move up was just a kiss goodbye. This one did it against the initial neckline and it met with the percentile. And Nvidia, I need to print a poster with this, because from this area, and please go to my videos in October, November last year, I said so many times, Nvidia is building the same pattern as Bitcoin in 2021, and I started improving the drawings, but we already had those drawings in a different shape. And I was looking for the 0.3 and being confused. Are we going to go to 135 somewhere in here with the 21 weekly, or are we just going to puke? So now I'm confident. I'm going to move the 0.3. I'm not cheating. This is just perfectly matching them, but that is what I was expecting. The 0.4 is going to stay there at 72. Let's see if we break this support at 92 and we can do the full target of 71 or 72. Amazon breaking the bearish pattern as well, going straight into the percentile. Tesla reverting all the progress in here. My area of value from $240 to $300 is at the moment being tested. Let's see how it's behaving against the monthly. And Tesla seems to be having a monthly breakdown. If we close April, of course we are very early, but by the end of April, I really want to see Tesla reclaiming the monthly support. The weekly, I suspect, is also being tested. Slightly below it, we can see we need to reclaim those levels to prevent Tesla going into 166. And I suspect Palantir broke down. Yes, it did. If it gets to $64, it completes the head and shoulders, which I gave you a target to $8. Don't kill the messenger. This is just dump TA. Microsoft breaking down as well with a target of $310. You can see how it's breaking down on the weekly. The RSI of Microsoft, have we ever had 29 on Microsoft? I think we did, but it was in 2006. That's crazy. Maybe in 2010, to be fair. That's the last time. So we are as oversold on the weekly as 2010. That is 15 years ago. Meta, look at this breakdown, halfway through towards the target of 440. And MicroStrategy, incredibly, is holding on to that rejection very decently, because you can see higher lows in here. It's kind of performing as Bitcoin is trying in here to defend this triangle and reclaim the 310. If it doesn't manage, targets are 180 followed by 107. And Robinhood broke down from the head and shoulders. The target is $10. I'm sorry to give this news. I'm excited about the technicals. If you're holding these stocks, I'm not laughing. I am also holding things in my pension, so I don't like seeing really this in terms of cash when I look at the pension, which I'm not managing. By the way, it's just, they do whatever they do. But since I saw this thing on the VIX, I kept thinking I'm gonna move my pension into something that I manage. And I never did it. But, well, anyways, guys, I hope you appreciate this long update on a Friday. I'll do a very quick update tomorrow morning, I promise. Enjoy the rest of Friday and the weekend, and I'll see you on the next one. Take care. Bye-bye.